So now we are going to start with a new act called as the Companies Act 2013. With regard to the Companies Act 2013, we are going to, with regard to Companies Act 2013, we are going to discuss about 5 different units applicable for your syllabus. The 5 units are, the first one, Preliminaries of Companies Act. Okay, see, I will show the screen. Okay, Preliminaries of Companies Act. Second concept we are going to start is, first one, preliminaries. Second one I am going to start is kinds of companies. Number 3, Memorandum and Articles. Number 4, share capital. Number 5, incorporation of company. How many parts are there? 5 parts. From all these 5, 21 marks will come in exam. How many marks? 21 marks will come in exam. So crucial 21 marks. Okay, negotiable 14, Indian Regulatory Framework 8, LLP Act 6 to 8, and Companies Act will be 21. That means the 2 days of session you can complete the major portion and complete of the, so first passing becomes secure if you complete these 4 chapters properly. If you complete these 4 chapters properly, and the NI Act, Indian Regulatory Framework, Companies Act, LLP Act, add partnership also to this, 60 is your mark. No doubt on that. You need not have a doubt. 5 chapters, if you are perfectly targeting on that, 100% you will get 60 plus. Okay, if you read others also in a proper way after this 5 chapters, another 2 chapters are there, SOGA and this other part being Contract Act. Plan properly, and if you prepare, that's all. Sky is the limit for you. And moreover, with regard to the Sale of Goods Act, all the videos already there in the YouTube. You can see there. Okay. So the point what I wanted to tell is, in the YouTube I already kept so many videos regarding the Sale of Goods Act. You can see there. And after this also, if time is not permitted for you to sit here, or in the revision class, in the time permitted, if it is not possible, at least go there and see. There are so many videos regarding the partnership, Sale of Goods Act, everything was already there. Okay, let's take a benefit of first completing this 21 marks area, okay, which is Companies Act. Okay, let us safely complete it. In a rush, let us not complete only limited syllabus. Whatever we complete, let us complete in a proper way. Are you all ready? Shall we start? Okay, so first point number 1, we are going to start with Preliminaries of Companies Act. The notes, whatever you are seeing on the screen, more than enough for the exams. Okay, what is it? More than enough. First one, features of a company, same like LLP. Okay, same like LLP. Artificial legal person means what? Company created by a legal process. Okay, it can do all the things what you and me can do. It can buy, it can sell, it can lend, it can borrow, it can enter into contracts, it can sue you, it can be sued by you. Anything it can do. Okay, so but company is an artificial person, natural person, artificial. It cannot do anything on its own. It should require a human agency. It requires what agency? Human agency. Who is that human agency? Directors. Directors are the agents of the company, not to every member. Okay, agents of the company means they can do whatever on behalf of the company. Okay, they can do whatever they want. So, but try to understand the concept clearly. Every company is an artificial person. Okay, it cannot do anything on its own. Who should do on behalf of company? Directors only should do. Directors must be human beings. That's why they tell human agency is required. Agency means what? Anything, any person who is doing anything on behalf of another person is an agent. Company cannot do anything on its own. I am doing on its behalf. I am an agent. Who is agent? Director is an agent. To whom? To a company, not to every member. Okay. So I repeat one more time. Company is an artificial person or a natural person. Artificial person created by law. It can do anything like an individual. It can buy, it can sell, it can borrow, it can lend, it can sue, it can be sued. And it needs a human agency. Directors will do. But it cannot be jailed, take oath, marry, etc. Next one. Perpetual succession. Members may come and go, but company will always remain. Company will always remain. How companies form? Legal process. Company should also end by legal process called as winding up. Okay. Member coming in and going out will not affect. Shares will change the hand, but company will always remain. Company is unaffected by death or insolvency of the members. Understood? Next one. And those students who are on the Zoom live, please stop discussing about other things here. What completed yesterday, what completed today. Please concentrate on what is discussing now. Are you understanding or not? In the limited time available, I will complete as much as syllabus as possible. Okay. Even after this, if these sessions are completed, no problem. I will come live and I will take. Okay. No worry in that. Anyway, all the chapters are available on YouTube also. You can listen there. Stop discussing about what happened yesterday, what he thought in the yesterday's class. Why all these you need now? Okay. Please concentrate on what is going on. See there. Limited liability. What is limited liability? Company will be always having their debts, but debts of the company will be paid by money belonging to the company, means assets, cash belonging to the company. Loan is on the liability side, cash is on the assets side. With the company's cash, you should pay company's liability. Members will not be liable. Members will not be liable. For example, company came to closure. We will sell all the assets. We will get money. We tried to pay. We got 100, but liability is 150. Now members will become liable to the extent of that 50. But that 50 completely they are not liable. Every member will be liable to the extent of amount unpaid on the shares. Next, common seal. Sir, what is a common seal? Just now I told you. Company is an artificial person or natural person. Company is not a natural person. Therefore, it requires human agency. Company cannot come and sign. Directors has to affix the common seal. That affixing is called as a official signature. Okay. It will be affixed on what? White papers are contracts by the officers and employees. Next, separate legal existence. Very popular concept. Separate legal existence will say that company is different, members of the company are different. Company and the members of the company both are never treated as one and the same. Okay. Number one. Next, company once registered, it will be clothed with a legal personality. It is a person recognized in the eyes of law. It can enter into its own contract. These all points are similar to artificial legal person. Okay. So first thing, I completed features of the company. 2 minutes time. Please read. You can read from study material. You can read also from the charts material. Both the places content is essentially the same. Please complete it in the class itself. You don't have that much time to read again at home. Okay. Let us move on to the next part. So, first one, case laws are there. In this, there are totally 5 different kinds of case laws. One is Salomon versus Salomon case law. Next one is Ilford Motor Company versus on Merchandise Transport Company versus British Transport, Dinshaw Manikji Petit, Daimler Company, Workmen of Rubber Industries Limited. These are all the various case laws which we have to cover. Okay. First, what I will do is, first I will explain Salomon versus Salomon case law. In the revision session, I just wanted to give you the judgments. Means if the question comes in examination for 3 marks to 4 marks, how to answer. Okay. Salomon versus Salomon case law, I think every one of you know the facts. Salomon is there, started leather business, started as a sole proprietor concern. Later they converted into company. Later, please participants mute yourself. Okay, see here. So, Salomon is there. Salomon started a leather business. Leather manufacturing business was started as a sole proprietor concern. Later, he converted into company. All the assets and liabilities of sole proprietor concern are transferred to the company. After transfer of all assets and liabilities to the company ran very well. After that, when company was formed, like this, it was distributed. Salomon has taken a cash of 8,782. Issued debentures means what? Some amount he didn't give, company didn't give him. It was shown as a secured loan. Secured loan means loan protected by assets of the company. Means if something happens in future, I can sell the assets and get my money. Those are called as a secured loans or secured debentures. Okay. When Salomon started a sole proprietor concern was sold to the company. So company should pay to the sole proprietor. Who is the sole proprietor? Salomon. Salomon said that you have to pay me. You do one thing. You don't pay me entire amount. You pay me amount in the way I tell. So he said, company, you pay. Okay, you pay 38,782 pounds. 38,782 pounds. But I will tell how to pay. First, 38,782, 8,782 pay in cash. Cash of the company. Sole proprietor concern to company, cash is transferred. Again, the cash is taken by Salomon. 8,782 pounds. Done. Balance 30,000 is there. He said, balance 30,000 is there. In the 30,000, company, don't pay to me immediately. His company only, but company and he is not one and the same. Na? He said with the company with a written agreement. Don't pay me 10,000 pounds today. Show it as a loan. Loan means you will pay me in future. I don't want immediately. Okay, on that I will take interest every year. But it is a secured loan. If something happens in future, at least I can sell assets and I can get back my money. Secured loan la 10,000 shown. And then he said that shares when they issue, so I have taken in cash, Salomon taken in debentures, and now he has to take in shares because in a company 7 members are required at that time. So 7 members of Salomon is 1. His family members are 7 totally. Salomon, wife and 5 children, totally 7. Okay. So what he did is, balance how much is there? 38,782. 8,782 cash. 10,000 show, now balance 30,000. 10,000 as a loan. Balance 20,000. 20,000 key, he did not get the shares totally because if he get the shares totally, it will become 1-person company. At that time, 1-person company concept not there. Only public company, that to 7 members. So he said, in the 20,000 shares, 19,994 shares I will take. £1 each. 20,000. 19,994 pounds over. Still 6 pounds has to be paid. 1 share to wife, 1 share to each of the child, being 6 shares totally for wife and children together, and totally made as a big company. And after that, company ran the business, super success model. After that, after some number of years, unsecured creditors are also created. 7,000 pounds worth unsecured creditors. Unsecured creditors means goods given by them. What is given? Goods are given by them. So unsecured creditors are created. How many pounds? 7,000 pounds. Done. After that, government imposed a ban on leather. Leather was banned. Leather machinery banned. Everything is banned. Business became zero. Company went into liquidation. Then the problem is when the company went into the process of liquidation, I will sell the assets and pay liability or not. All the assets are either leather or leather manufacturing, or a leather manufacturing machines are there, which became zero value. Company almost became zero except some amount of cash. Company sold all the assets. It got exactly 10,000 pounds. It got exactly 10,000 pounds. Who sold? Liquidation started. Company la leather is banned. My complete assets are in the form of stock of leather. Okay? My complete leather assets are in the form of leather. The participants, please mute. So, completely assets are in the form of either fixed assets, current assets. Two types of assets will be there. Fixed assets, leather manufacturing machine is there. Current assets, leather is there. Stock, leather. Current assets, leather manufacture, leather is there. Fixed assets, leather manufacturing machine is there. Leather band means what do you do with the leather manufacturing machine? When I sell in the market, market value is zero. Leather banned, like 1,000 rupee notes are banned. Next day value became zero, leather became zero. I have a 1,000 rupee manufacturing machine. What is the value after ban? Zero. Same. Once ban is made, value becomes zero. So suddenly crores of business became zero value. But the only thing is, there is one asset which is a general purpose asset. You can use it for leather or for other products also. That was sold. 10,000 pounds came. How many pounds? 10,000 pounds came. Now using this 10,000 pounds I have to pay. Okay, using this 10,000 pounds only we have to pay. Pay whom? Pay the creditors. That's it. They sold the assets. They sold all. And 10,000 pounds has come. Just a minute. Just in a while, I will come back. Just 1 minute. 2 minutes, I will come back. Okay, let's continue. So, company sold its assets. It got some amount. Using that amount, the company has paid the company has to pay the liabilities. So when company sold the assets are only worth 10,000. 10,000 pounds came. Okay. Now the problem is 10,000 pounds is there. Liability side, two people are waiting. Number one, secured creditor being Salomon, unsecured creditors being public. Salomon has to be paid 10,000. These people has to be paid 7,000. Now problem started. We have 10,000, but we should pay 17,000. Whom to pay first? Okay. Then unsecured creditors said to the court that court, use common sense. Who started company? Salomon. Okay. Who is the major shareholder? Salomon. And who is the secured debenture holder? Salomon. To whom you are paying? Salomon. Means company and Salomon are one and the same, means Salomon is paying to Salomon. It's wrong, court they said. Court said that, Are Muttal, unsecured creditors. Okay? Just because of the reason that Salomon is the major shareholder of a company or Salomon is the main player in that company, that does not mean Salomon and company are one and the same. First they said only one question. Court asked one question only. Company went into liquidation all of a sudden. That happened because of mistake of Salomon. That happened because of government ban. Government ban. For that, what Salomon can do? Point number one. Number two. Just because of the reason that entire share capital is virtually held by one single person, does not mean he and we company are one and the same. Okay. So company is completely a different person from that of the persons who formed the company. Okay. Previously, it's a sole proprietor concern. Who is to do the business? Salomon. Now it is a company. Who is to do the business? Salomon. Though in both the places, Salomon is the main party. Company, when you see company and he will not be treated as one and the same. Simply to tell, in this case, the court has given a judgment that payment will be first made to the secured debenture holder being Salomon. Salomon and company are not one and the same. Please read the judgment. Only read the judgment, complete it fast.
Hmm.
Okay, let us go to the next topic. Next topic is corporate will and lifting of corporate will. A corporate will is a legal concept where company will be treated separately from that of the members. A concept is called as a corporate will. Okay, same separate legal existence, another name a corporate will. Okay, so simply they tell that members of the company will not be liable for what the company has done. Company liability is company liability only. Like that, company assets are company assets only. Okay, lifting of corporate will. Company and members are not treated as one and the same. Both are treated separately by the courts. But if there is a fraud or a bad intention in the company, company and members will be treated as one and the same. Simply in two things I will tell. Car is an artificial person. Car met with an accident, means car hit a person, that person died. Car will not be kept in jail, driver will be kept in jail, because we wanted to lift the corporate veil. If car is going well, car only will be in records. If wrong is done, driver will be in records, because car cannot do anything on its own. Same, company is a car, drivers and members are sitting inside. If everything is going well, company gets the credit. If wrong is done, company cannot do the wrong, you will become liable. Okay, in this mode there are 5 case laws. How many case law? 5 case law. After this I will give 10 minutes break once we complete all the 5 cases. Okay, after that just 1.5 hours I will complete all the other concepts inside the Companies Act and close. Okay, each and every important concept of Companies Act we are going to cover. Okay, let's see. Case laws. Guilford Motor Company versus Horn. Sir, in this case law, what has happened in a summary I will tell, because I am going to take only 2 minutes each for each case law. First, number one, Guilford Motor Company versus Horn. There is a person called as a Horn who is a chief engineer of a particular company called as a Guilford Motor Company. He wanted to come out of the company. The company asked him, sign an agreement that you will not enter into any automobile business in future. He signed on that, took money also. Later he started a company with the same automobile business. Okay, then they said that, array fool, how can you start? You took money, you signed agreement. He said that agreement was signed by me, but I am doing business in the name of company. Therefore, what is the meaning? Company and me are treated as one and the same, na? Sorry, different, na? Therefore, you entered agreement with me, not with the company. Court said that your intention to start a new company to do automobile business is just to deceive the agreements. Deceive means cheat. The agreements which are already entered. Therefore, your intention of starting a company is good intention or bad intention? Bad intention. Okay? Where the device of incorporation means what? Where the company, device of incorporation means incorporation creates what? Device called as company. If the company is used for improper purpose like defeat law, which law? Agreement is a contract act. Contract law, corporate will be lifted. Means company mask you are wearing now, I will remove that mask. Who is there inside? Guilford. So both are treated as one and the same. Therefore, on and company are treated one and the same. Merchandise transport. There is a company, X Limited, Y Limited. X Limited is having a prohibition against it. Listening. X Limited has a prohibition against it that it should not carry on business. Therefore, X Limited started Y Private Limited. A company. Okay. Since I cannot do anything on my own, I will get it done through this company. Why? In this particular second company, this company hold 100% capital. So see here, X Limited, Y Limited, or Y Private Limited. Y Private Limited balance sheet like equity share capital will be there na. 100% is held by X. Means what? X is the holding company, Y is a wholly owned subsidiary. Whatever Y has to do, X has to tell. Okay, X is banned to carry business. Therefore, they started Y to apply for the transport license. Court said that why Y Private Limited is formed. The intention of forming the Y Private Limited is, since X Limited is prohibited from this, they wanted to get the work done through Mr. Y or Y Private Limited. Therefore, Y Private Limited is a agent to X Limited. Y Private Limited is a agent to X Limited. The license has been rejected also to the subsidiary, as it is a agent to the holding company. Sometimes if the company is formed as agents of another company, it loses its individuality. So, Y Private Limited and X Limited both are treated as one and the same. Next. What is the next one? Dinshaw Manikji Petit case law. Very, very important. Listen carefully. There is a billionaire called as a Dinshaw. He used to have a lot of assets. Assets are in the form of shares and debentures. Shares give dividend to him. Debentures give interest to him. Both are taxable in his hands. Huge tax he used to pay. Now his intention is, company's key dividend income and interest income is not taxable at that time when this case law happened. Now taxable. Okay. Now everything is taxable in India. Okay. If you snore, taxable. If you eat, taxable. So let us take care of the main concept. There is a person called Dinshaw. He is a very wealthy man having huge properties with him. What he thought? I am having shares, I am having debentures. On shares, dividend income is coming. On the debentures, interest income is coming. Both are highly taxable under income tax. He wanted to escape that. What he did, he started 4 private limited companies. At that time when this case law happened, companies' income in the form of debentures and debenture interest and dividend of shares is exempted from tax. Therefore, he started 4 private companies. To the 4 private companies, shares and debentures are transferred equally, 25%, 25%, 25%, 25%. So, when assets are transferred to 4 companies, income also will come to 4 companies. Income also comes to 4 of the companies. That income came to 4 companies. If it comes to Dinshaw in the form of dividend, again it will be taxable to him. Therefore, what he did is, 4 companies will generate income. I repeat, Dinshaw is there. He has shares and debentures as assets. He transferred all the shares and debentures in the name of 4 private companies. When assets are transferred by him, income on assets also will go to the company. Company P&L account, credit side, income there. That income will be shown as a resource and surplus in the liability side, capital side. We will add to the capital and profits added. Now what they did is, instead of taking dividends, if Dinshaw take dividends from 4 companies, what will happen? Again, dividends is taxable in the hands of Dinshaw. Then what is the purpose of doing all these things? So, the dividend, whatever, the income, the profit, whatever the 4 companies generated will be taken by Dinshaw in the form of a loan, So now tell me, how many companies are formed? 4. In the 4 company, who will be the shareholder? Dinshaw is shareholder. Dinshaw and wife. 1000 shares are held by Dinshaw, 1 share is held by wife. Or 999 by Dinshaw, 1 share by wife. Like that he started 4 companies. Okay. So 4 companies generated income. That income will be taken by Dinshaw. In the form of dividend? No. In the form of a loan. Who give loan? 4 companies will give loan to the Dinshaw. Now the companies will ask the amount back. Loan means, whose company they are? Dinshaw. Dinshaw will ask Dinshaw, pay me. So they don't ask. So I'm going very fast because this takes around 1.5 hours in the regular class. So just I wanted to explain you what is the logic of this case law. There is a wealthy man called as a Dinshaw. He used to have assets in the form of shares and debentures. Shares used to give him dividend. Debentures used to give interest. Those are taxable in the hands of Dinshaw. He wanted to escape the tax. He started 4 private companies. Why companies? Income in the form of interest and dividend is exempted at that time. Exempted means not taxable at that time. He started 4 companies. 4 companies he transferred assets. He transferred assets. Assets are transferred. Income came to 4 companies. That means previously dividend and interest used to come to Dinshaw, now came to Dinshaw's companies, 4 private companies. Companies when they formed, someone should be the shareholder or not. Dinshaw is a majority shareholder, wife is the minority shareholder. Started. Income came. income of companies will be given to the shareholders in the form of dividend. If they give us dividend, again dividend is taxable. Therefore, what they thought is, let me take this amount in the form of a loan from the companies. Okay, income will be there means cash will be there. That amount of cash he used to take as a loan. When you take as a loan, loan is not taxable. He escaped the taxation. That means technically, previously I used to get income. Now also I used to get income. Okay, but then income is taxable. Now this income is in the form of loan, it is not taxable. Escape the tax. Then court came to know that the main intention of forming 4 companies is not to do any business. Those 4 companies will no assets, no business except these shares and debentures. Then court said that Dinsha and 4 companies are treated as one and the same. Income of all the 4 companies will be taxable in the hands of Dinsha. Read the judgment. Okay, next. Daimler Company. The Daimler Company, one new concept we will learn. This is called as a test of control. Test of control. Listen. Daimler is a company in England. Continental Tire and Rubber Company is also in England. Daimler purchases tires from Continental Tire Company. Daimler is an automobile company manufacturing cars. Continental Tire is name lone there, tire manufacturing. So who will buy tires? Daimler will buy tires from Continental on credit. 3 months credit. Means what? I will buy today, I will pay after 3 months. What happened? Let me say. England, though both the companies are incorporated in London. Means which company they are? They are all English companies. England, if a company incorporated, people call it English company. Both are English companies. What both? Daimler, Continental. Both the companies are English companies. English companies means companies which are incorporated in England are called as English companies. Both are English companies. Formed. Once both are formed in England, they started business. One used to buy from another and used to pay in credit after 2-3 months. Up to there, everything is going good. What happened is suddenly Germany and England became enemies. In the World War time, some countries will go into the USSR, some countries have gone to the Germany side. So who are not on the Germany side will be enemies for Germany. So therefore England is on USSR side, Germany is on a different side. Then what will happen? Germany and England are enemies now. Sir, why Germany is coming? Sir, both companies are in England. Here is the catch point. The point is, though both the companies are in England, Continental Company, the company which is giving tires, is belonging to Germany company. Why? That company is incorporated in London. That company is incorporated in London. But all the shareholders except one are all Germans. Company is incorporated in London, but all shareholders are Germans. Directors completely Germans. Means what? Total company is operated by Germans. Total company is managed by Germans. Company mattume is in England. Means what? It is a it is a German operated English company. It is a German operated English company. Are you understanding or not? How we say India is independent, but still we use all English products. For namesake, we are independent India, but still the cars we use are from USA, UK, etc. The brands of dress we use are from USA, UK, etc. Technically, previously we are directly under control of British. Now what is happening? Mainly India is becoming independent, but technically we are still dependent on so many things on them. But okay, forget about it. Main concept is same like that. Company is in London, I don't deny. But the problem is all the shareholders of that Continental company are Germany. Means what? It is a German operated English company. Means enemy operated English company. Therefore, if you pay money to Continental during the war time, what will happen? That money will go to the Germany. Means payment is made to enemy indirectly. Therefore, Contract Act, there is one point. Payment to enemy is prohibited. Contract with enemy is prohibited. Therefore, during the war time only, okay, Daimler need not pay to Continental because though Continental by incorporation is in England, that company, though it is incorporated in England, that company's majority control is in Germany. During wartime, we should not see the place of incorporation, we should see the control. Who is controlling, that is important. Okay. In case of trade with enemy, one should adopt test of control, not the test of incorporation. If the public interest is in danger, jeopardy is in danger, courts will not crack the corporate shell. Unlike natural person, a company cannot have a mind, okay, manasakshi, conscience, and cannot be a friend, cannot be enemy. Company cannot be friend or enemy. But enemy controlled companies will be treated as enemy only. So Continental Tire and Rubber Company Limited, though incorporated in England, if you really remove the mask, all are Germans inside. Therefore, it is treated as an enemy. Payments need not be made to that during the wartime. Last one. Workmen of Associated Rubber. So simple, sir. Same Dinsha case. Same Dinsha case. There is a company. That company used to get huge profits. When profits are there, bonus has to be paid. To evade the bonus, evade means escape the bonus, they transferred all the assets to another company. Therefore, income is falling. Therefore, they escape payment of bonus. Court said that you transfer your assets to other companies such that income of this company will reduce such that you can pay lesser bonus to them. So, the intention of starting the company is to defraud the workmen. Therefore, company and the new company are treated as one and the same. That's it. That everyone in the class, please answer. Preliminaries law, all the case laws, have you all understood clearly or not? Okay, okay, done. So let us take a 5 minutes of break. Okay, or 10 minutes maximum. We will again reassemble back and continue and complete all the concepts of Companies Act. Okay, take a break of 10 minutes and come soon. Let us continue. So let us continue. So we completed unit number 1 of Companies Act. Next one is unit number 2. What is the unit 2? Kinds of companies. Kinds of companies. Okay. So in this, we are going to complete all the kinds of companies very fast. Okay. Listen. In our syllabus, there are so many types of companies as are made applicable. Starting with private company, public company, OPC, unlimited company, company limited by shares and guarantee, holding subsidiary, associate, listed, unlisted, dormant, small, government, foreign, nidhi, PFI, and companies incorporated outside India. Companies incorporated for a charitable object. First observation. Last attempt, a 7 marks question came from one person company. A 7 marks question came from holding subsidiary, associate. Okay, and remaining came from the remaining chapters of Companies Act. The modus operandi, what I wanted to tell is, this attempt, there is every chance that most questions can come from Memorandum and Articles. This attempt, especially September 24 attempt, there is every chance that the questions will be majorly tested on Memorandum Articles chapter. Okay, that's why once I complete this, I will go to the Memorandum Articles. I will complete this chapter very fast. Okay. Since a question on OPC came in the very last attempt, chances of coming that again is very, very less. Holding subsidiary, associate also same. So what I will do is, one person holding subsidiary, associate concepts I will complete very fast. Remaining concepts moderately I will go and complete. Okay, let us start. Okay, let us see. First one, what is a private company? The first question. Private company means a company which is having minimum paid up share capital. Mandatory paid up share capital is required. And the private company articles will do 3 things. Restrict, limit, prohibit. Restrict the transfer of shares. Limit the total number of members to 200. Prohibition on public subscription of securities. When I say 200 limit is there on number of members, in this 200, joint members will be treated as one member. Wife and husband purchased share me, wife one shareholder, husband one shareholder, we will not treat. We will treat both them as a batch, as a single member. So joint members will be treated as a single member. And into the 200, who will be excluded? Employees. Employees are of two types: past employee, present employee. Present employees are excluded straight away. Past employees we will divide it into two parts. When you became a shareholder, you became a shareholder while in employment, excluded from the 200. You became the shareholder after employment is ceased, you are included in 200. So into the 200, who should not be counted? Even though there are 1000 employees holding shares, we should not include them into the 200. Other than employees, we have to count. Which employee? Present or past? Both. In past, you will be excluded if and only if you acquired the shares of the company while in the employment. Okay. Next. So we now completed private company definition. You can see there. Restrict the transfer of shares, limit the number of members to 200, prohibits public subscription of securities. Non-inclusions: present employees and past employees are not included. Joint members will be treated as a single member. Public company: every other than private company with a minimum paid up share capital will become a public company. Other than private company, everything is public company with minimum capital. Okay, but important one is a deemed public company. A company which is a subsidiary to a public company will always become a public company. Means what? X Limited is there. Y Private Limited is there. X Limited holds a 70% in Y Private Limited. Y Private Limited becomes subsidiary to X. X Limited will become holding company to Y. Correct? Now tell me, Y Private Limited is a private or public? Deemed public company. Why? Any subsidiary to a public company, will be deemed as a public company only, though it is a private company by articles. Logic, everything, regular classes, not in the revisions. Okay, next. One person company. Last attempt the question came, but still in the syllabus fast I will complete. One person company member is only one. Directors can be more than one. Why we want one person company? Single entrepreneurs should get a promotion. Okay, they should promote company concept in sole proprietary business. So it will provide separate legal existence, limited liability, etc. And exemptions are there for OPCs. Next one. OPC is a private company. Members not more than one. Can have more than 15, not more than 15 directors. Okay. Whenever I say OPC, 6 clauses of memorandum will be there. Name clause, objects clause, same clause, situation clause, objects clause, capital liability clause, capital clause, and association clause. When I say association clause, we require association of person. OPC lo only one person is there. Where is association here? Therefore, instead of association clause, there will be a nomination clause. There will be what clause? Nomination clause. Nomination clause la nominee name will be written. Before writing the name of nominee, we should take his written consent. What will become nominee? What nominee will do? If single member, sole member die, nominee will become the member of OPC. Okay, and nominee can withdraw the consent anytime. Nominee can withdraw the consent at any time. Company also can change the nominee at any time. Okay, I repeat. Nominee name will be mentioned. Who will become member upon death or incapacity of sole member? 1 point over. Obtain written consent. Nominee can withdraw the consent. Member also may change the nominee. Means the sole member also may change the nominee. Whenever changes happen, inform the ROC. That's it. Over. Next one. How to become a OPC? Who can become? Natural person only should become member. Member and nominee, both. Natural person, Indian citizen, resident in India or not is irrelevant. Stayed in India for not less than 120 days in the preceding financial year or not. Yes, that's all. You can be eligible. Okay. Next. One person can become a member and nominee, not more than one OPC. Simply, there is X Private Limited, one OPC. In that I can become member. In another company I can become nominee. Are you understanding or not? Or member is possible, nominee is possible in another company. Listening? Nominee member is also possible. Simply, member in two companies at the same time is not permitted. Okay? Member nominee possible, nominee member possible. But member nominee not possible. Okay? Sir, member nominee possible. Sir, third company chance illa. Only two. That two, you should become nominee in one company, and other company you can become a member. Understood the point clearly? So tell me, who can become a member of OPC? Number one, natural person, Indian citizen, who stayed in India for not less than 120 days. Whether he may be a resident, may not be a resident. Maximum number is, okay, you can become maximum member and nominee in one OPC. Okay, next. What OPC cannot do? It cannot do Section 8 activity. Under social activity, it should not do. Next one. cannot start as a NBFC activity. Means banking and non-banking look, please don't come. OPC cannot do all those things, including investment in body corporate. Okay. This is all about the concept of OPC. So if you read it, we'll go into the next one. Okay, you can read later. OPC, I'm not giving much importance this attempt. Same with holding subsidiary associate law, I'm not going to give much importance to them because already tested in the last attempt. But still I will explain, but I will not give more importance this attempt. Okay. So let us see. Next one is companies on the basis of its control. Company on the basis of its control. What is this? There are three types of companies on the basis of control. Holding company, subsidiary company, associate company. Everyone. Holding company, subsidiary company, associate company. What holding company, subsidiary company, associate companies will do? Listen. Holding company in relation to another company means a company in which the other companies are its subsidiary. Simply to tell, there is no concept of holding company if there are no subsidiaries. You want to tell that. Okay. Whenever I say in the class, so many times in regular class I told you, holding company, subsidiary company, the terms are relative in nature. Means what? In relation to another, what is the meaning we should see? In relation to another, what is the meaning we should see? Okay. So, simply to tell, there is a company. There is another company. I asked you. Okay. I asked you, what is this? 1 minute. X Limited is holding 70% in Y Limited. Okay. I asked you, what is this? Don't tell subsidiary, tell Y Limited. I asked what it is. Don't tell holding, tell X Limited. If I ask you, what is this to this? In relation to this, what is this mean? Then you should tell this is holding, this is subsidiary. Therefore, holding company in relation to one or more companies means a company in which such one or more companies are its subsidiaries. So, if they are your subsidiaries, you will become holding. That's what the definition wanted to convey. Okay. I am erasing this. Read it once. Okay. Subsidiary. Same. Subsidiary in relation to one or more other companies, any other company, because one holding company can have multiple subsidiaries, but one subsidiary cannot have multiple holdings. Therefore, subsidiary company in relation to any other company, that is to say a holding company means a company in which. So, how to become a subsidiary? Two chances are there. Through shareholding control or through board composition control. Through shareholding control or through board composition control. What do you mean by shareholding control? Holding company held not less than or more than 1/2 of, more than 50% of, that's the meaning, 1/2 of total voting power. When I say voting power, equity shares, either at its own or together with one or more of its subsidiaries. Okay. Already I am holding 51%. That's all. You become holding, that becomes subsidiary. No, sir. I am a holding company X. I am having subsidiary Y and Z. Okay. There is a company A. Together with its subsidiaries. Means what? Y is holding 20%. Z is holding 20%. Okay. X is holding, say for example, 10%. Or X is holding 11%. That's all. More than 50 together with its subsidiaries is holding. A Limited will become the subsidiary to X, not to subsidiary to Y and Z, because Y and Z are subsidiaries to X. Okay. Again I repeat. Who is Y? Subsidiary to X. Z. Subsidiary to X. A. It is not a subsidiary to anyone as of now. Y held 20. Z held 20. My subsidiaries held 40. I am now holding 11. Together with the subsidiaries, I am holding that more than 1/2 or not. That said, it become a subsidiary company. So, you can control, holding company can make a company as a subsidiary company in two ways. Way number one. First one, shareholding control. You can control the shareholding of that other company and become a holding. Shareholding control means what should I do? Holding company should control. Holding company should control more than half of the total voting power. either own or together with the subsidiaries. Next, sir, I can control only shareholding. Board of directors I can't control. You can control the composition of board of directors also. You can control the composition of board of directors also. That means board of directors are not controlled. Composition of board of directors are controlled. Meaning is what? I am saying stand, sit. This is controlling board. I am telling don't be here, leave the company. I am removing you. This is controlling composition. I am not telling what to do and what not to do. I am telling whether you should be there in the company or not there in the company. Choice of directors is in my hand, not choice of their deeds in the company. So, control of composition of board means having right to appoint or remove directors. It's not about asking them to do something, not that control. We are not controlling board, we are controlling the composition of the board. Understood? Next. What is the next one? Associate. Associate company in relation to any other company means other companies having a significant influence. Sir, what is significant influence? If you come by shareholding, not less than 20. Not less than 20. So not less than 20 means 60 is also not less than 20. If it is 60, it becomes subsidiary. Therefore, significant influence and not a subsidiary company. Okay. So what is significant influence? Not less than 20, not more than 50. Or participate in the business decisions. Participate in the business decisions. Okay. Shares held in fiduciary capacity, don't make an associate company. Okay. What is the meaning? I can't explain now. Time is not sufficient to explain what is fiduciary capacity. It will take 15-20 minutes now. Okay. Remember, question comes in exam. Shares held by one company in another company in fiduciary capacity. Will it become a associate? No. Next, joint ventures are associate companies. Joint ventures are associate companies. Since this question was already tested in the last attempt, I am not showing that much important. So this just I covered on a overall basis. Read for a minute. We'll go into the next one. Completed? Next one. Companies on the basis of liability. Companies on the basis of liability. This time, this question has a chance. Companies on the basis of liability. This time, chance is there for two types. One, what I will shown you now. Okay, remaining is a dormant company. Dormant company also have a chance to come in the coming examination. Chance is there. Okay, I'm not telling surely it will come. Chance is there. But this one have a heavy chance. Companies on the basis of liability. Listen carefully, sir. I will first explain. Notes you can read later. Fastly I will explain. 2 minutes I will spend for each. 5-6 minutes I will complete this concept. Okay. Next, first one. What do you mean by companies on the basis of liability? Companies on the basis of liability means there are three types of companies: company limited by shares, company limited by guarantee, unlimited company. Okay, first one, company limited by shares means what? Liability of a company will be limited to the extent of unpaid amount on shares. I subscribed for 1000 shares, 7 rupees paid, 3 rupees unpaid. Company went into winding up. Assets are sold. Assets are sold. Okay, 100 crores came. Liabilities are 150 crore. Balance is how much? 50 crore. I will pay 50 crores. No, I will pay my number of shares taken into balance amount unpaid. So 1000 shares I have taken, 7 I paid, 3 unpaid, 3000 I will pay out of that 50 crores and come out. Liability will be limited to the extent of amount unpaid on shares. Are you understanding or not? So first thing you should remember, company will always try to pay the liability out of the assets of the company first. If the assets are not sufficient to pay, means what? Assets side assets are 100, liability side 150. Now where excess is there? Liability excess. Now I need to contribute to what? Assets. So members should contribute to the assets to the extent of amount unpaid on these shares. Personal assets will not be subjected to any kind of company debts. Are you understanding the point or not? So see, liability of members is limited to the extent of unpaid amount on shares is called as a company limited by shares. Debts of the company, member may be called up to contribute assets, but that amount cannot exceed amount unpaid on share capital. Personal assets cannot be subjected to company debts. Okay. Next, member is a co-owner to the company, not to the assets of the company. Since company is a legal person, assets continue in the name of company. Next, company limited by guarantee. Simply, in a company limited by guarantee, liability of the members will be limited to the extent of the guarantee given. They will give at the beginning of the company, I will give 20 lakhs on winding up. That's all. My liability will be 20%. 1 rupee also I will not pay excess. Okay. So contribute to the assets at the time of winding up is called as company limited by guarantee. Okay. Next, liability of the members is limited to guarantee given. A company limited by shares and limited by guarantee are same in all the terms. Separately, limited liability, everything will be there. The only thing is when liability arises. Listen carefully to this. If it is a company limited by shares, liability to pay the money on the unpaid amount on shares can arise in two ways. Number one, at the time of winding up or even before. If company goes for a public offer, it will ask for the call money payment or not, first call. That means you are paying even before winding up or not. So in a company limited by shares, liability to pay the amount on shares can arise in two situations. Number one, before winding up, on winding up. But company limited by guarantee, liability to contribute will arise only at the time of winding up. So company limited by guarantee differs from company limited by shares in terms of timing of liability. In case of company limited by shares, liability may arise either before or during winding up. But in case of company limited by guarantee, liability will arise only at the time of winding up. Unlimited liability will be unlimited to the shareholders. Next, government company. Government company means a company in which not less than 51% of the paid up share capital held by CG-SG combination. Or directly you become subsidiary to a government company, you will directly become a government company. Two modes. Either government should hold or silently become a subsidiary to a government company, you will become a government company automatically. Over. Next, listed company whose shares are listed. Unlisted company whose shares are not listed. Nidhi company, mutual benefit society. Public financial institution, LIC, IDFC, UTA and institutions notified by CG. Next, foreign company. Company incorporated outside India, place of business in India. That place of business can be carried on either directly or through agent, physically or electronically. Next, small company. Again, another important question for the exam. Small company. First thing, to become a small LLP is different. The capital contribution and turnover. Here, to become a small company, first you should satisfy 5 conditions. Number 1. In that condition 1, 5 sub-conditions. Not a public company, not a holding company, not a subsidiary company, not a extended company, not a company or a body corporate, incorporated or a special act. Tell me, to become a small company, first thing, what is the first thing? Not a public company, not a holding company, not a subsidiary company, not a extended company, not a company or body corporate notified by, incorporated under special act. Next one is the limits. Paid up share capital not exceeding 4 crore. Turnover not exceeding 40 crore and this is end. Paid up share capital not exceeding 4 crore. Turnover not exceeding 40 crore. If both the conditions are cumulatively satisfied, then only you will be called as a small company. So what is a small company? Small company means a company which is satisfying both the conditions. Condition 1, not a public company. holding, subsidiary, section 8, separate act. Next, turnover, paid up share capital should not exceed 4 crore, turnover should not exceed 40 crore. Next, company incorporated with charitable object. Company incorporated with charitable object. Section 8 company. Company formed to promote, not to do business. Okay, that area should be promoted. More people should come into it. Promote commerce, arts, science, sports, charity, etc. Okay, next. Promotion, profits will come or will not come or may come, but the profit should be applied only for promotion of objects. Dividend is prohibited. That's it. Okay. Dormant company. What company? Dormant company. Sir, what is a dormant company? Dormant company means there can be two types of dormants. Dormant means idle. Okay, idle is called as a dormant. Companies are of two types: active companies, idle companies. Okay, idle companies are of two types again: idle from the very beginning, idle at a later stage. Idle from the very beginning is this one. Idle beginning la it is active, later became idle is this one. Sir, I started my company. Company started today, but I will not do business immediately. Acquisition of assets, acquisition of intangible assets, intellectual property rights, research and development, those I will do for the first 2-3 years. After that, I will start my main company. Now you are idle or not? At the beginning, you started a company. But then why to start company today? Start after 3 years. Then in whose name they will buy the assets? In our grandfather's name. So they can't buy now. So therefore, company is an artificial person, separate legal entity. Assets should be purchased in the name of company only. Okay, so research and development is an intellectual property right, it's an intangible asset. Okay, so therefore try to understand clearly. Point is, company formed under the Companies Act, but it is not formed for today's project, started for a future project. Then what you are going to do now? I am trying to purchase assets and hold them. Intellectual properties I will acquire. I don't have any significant accounting transaction. Repeat, I don't have any significant accounting transactions. Okay. Sir, what is significant accounting transaction? I should have or should not have a? I should not have significant accounting transaction. Then I will call you as a dormant company, inactive company, idle company. Sir, what is significant accounting transaction? Question will arise or not? Okay. Law did not define what is SAT. Law defined what is not an SIT. Means what? Instead of defining about what do you mean by significant accounting transaction, law has defined what are all the transactions other than significant. Okay, these four are not significant accounting transactions. Any transaction other than these four will be treated as significant. Number one, ROC ki fees payment is not significant. Payments made under GST Act, GST registration fees, not significant. You are purchasing the assets for the future project or not? From where you are getting money? From the allotment of shares. That's why allotment of shares is not a significant transaction. Okay, stationery, papers, all these purchase also is not significant. Okay, so tell me, law defines significant or non-significant? Non-significant they define how many? 4. Payment of fees to ROC, payments under this act, allotment of shares, payments made for maintenance of office and records. These are not significant accounting. So tell me, from the very beginning the company is inactive. Okay, we call it as what? Company which is registered under this act, not for today's project, for a future project. Then what you are doing today? Holding assets and intellectual properties. Okay, do you have any significant? And I don't have any significant transaction. What is significant? Law did not define what is significant. Law defined what is not significant. All others other than this will become significant. These 4. Or I am active at the beginning, now becoming inactive. Okay, means what? Inactive means, how to understand inactive? You don't have any business or operation, or okay, you are not filing your financial statements. Okay, you are not filing your financial statements or annual return for 2 years continuously, means there is no business. Okay, or has no significant accounting transactions in the 2 preceding financial years. We call that company also as what company? Inactive company. Okay, if my sixth sense is right, question will be there in this exam from the dormant company concept. Okay, read the concept. I am putting it on full screen. Dormant company, if you read, I will go into next chapter. Okay. Let's begin. Now we completed that area. Na? Okay. Let us come to a small chapter first. Share capital. Let us complete this. Okay. First, the time that I am giving for this chapter will be 10 minutes maximum. After that, I will go into Memorandum and Articles. The main concepts of Memorandum and Articles also we will complete. Okay. First one. See here, the name of the chapter is Share Capital. What is the name of the chapter? Share Capital. What is the meaning of a share? A share is a share in the total share capital of a company. Okay, total share capital of a company, in that your part is called as a share. Okay, so next one, types of capital. Equity, preference. Equity are two types. Equity share capital with voting rights, means one share one vote. Equity share capital with differential rights. Sometimes what companies can do is they may give two shares one vote, or they may compensating. For example, generally one share one vote. Sometimes company can tell, I will give one vote for two shares. That means generally one share one vote will come na, but I have to buy two shares to get one vote. Compensating this, they will tell, we will pay 2 times more dividend to you. Okay, so what I am losing in voting, I will get increase in dividend. So they are happy. Or vice versa also can happen. We will pay you, we will not pay you dividend. Okay, we will pay only half the dividend, but I will give you double the voting right. Those are called as equity shareholders with differential rights. Okay, next one. Preference share capital. What is the next one? Preference share capital. What is a preference share capital? The conditions to be satisfied. See here. General preference share capital, participatory preference share capital. Generally, preference share capital, preference shareholders will receive money at the end of the payments. Simply, if you take income statement at a P&L account, you will sell minus expenses. Okay, you will get some gross profit. In that gross profit, all expenses you will deduct. Finally, one amount will be there. Na? That amount will be taken by shareholders. There are two types of shareholders: equity, preference. Preference shareholders will be given more preference over equity, not at the whole company. Okay, so when last profit came, in that profit, first who will participate? Preference. Next who will participate? Equity. See there. Preference share capital shall be given preference over equity in two reasons, in two situations, namely payment of dividend. That means when the dividend is being paid by the company out of its profits, first pay to preference, next pay to equity. Okay, it may be with the tax or without tax. Next, repayment of capital. When the company is going for winding up, you will repay the capital or not. At that time, you may first pay to, so you will first pay to preference and then you will pay to the equity. Okay, sir, 100 rupees is the profit. Preference shareholders should be paid dividend at the rate of 8%. On that basis, I paid 20 rupees to them. Over, preference dividend paid. 100 crores came, 20 crores preference dividend paid. 80 crores is there. Who will take the dividend? Equity. Equity shareholders has taken, okay, equity shareholders has taken another 35 crores. Totally 55 crores over, 45 crores profit is there. What to do? Again, preference shareholders will get a right on that balance if the preference shares are participatory preference shares. That means participatory preference shares, shareholders will participate in the profits in addition to the fixed dividend. You are getting a fixed dividend first or not? Yes. After that equity was paid or not? Yes. After that still amount is left or not? Yes. On that also we will have the right. Same in winding up. Assets are sold, 200 rupees. Liabilities are there, 150 rupees. We paid everything. After that I paid 10 rupees to the preference shareholders. 20 rupees capital, a balance 40 rupees is there. 20 rupees to the equity we paid. In that balance remaining 20 excess assets, again preference shareholders will take the share. That means in the dividend, in the capital, if you get over and above your general value, we call them as a participatory preference shares. Okay, next one. If you don't understand, please go back to the video and listen. So what I said. Next, share as a movable property. Share is a movable property, means it is movable from one person to another person. That's why we tell shares are transferable. Physical shares will have number. Demat shares don't have any number. Okay, physical shares, shares held in physical form will have a number. Okay, if the shares are held in demat form, means a depository, if they held, number concept will not come. Next, Capital is of 5 types. Yeah, this is a very small concept. We need not even discuss, but still, see here. Highest capital of company, authorized share capital. One level below will be called up share capital. One level below, subscribed share capital. Oh, sorry. Issued share capital. Or I will tell this way. Authorized share capital, issued share capital, subscribed share capital, called up share capital, paid up share capital. Authorized share capital is the maximum capital. It's also called as the total capital, registered capital, nominal capital. Issued. In this, some part will be issued from time to time. From this, people will subscribe. In this subscribe moment, I will not call every amount on one day. I will call in calls. That's why called up share capital. In these calls, people will pay. Some will pay, some may not pay. If you paid, okay. If you don't pay, it's called as a calls in arrears. See the notes. I'm making it full screen. Complete it fast. Read all the concepts properly. Completed. Let us move on to the next one. So now we completed share capital also. Let's go to the memorandum and article. Okay. First, in memorandum and articles, there are so many concepts that are made applicable for exam. Main concepts which are very, very important from the exam's point of view, I will cover now. Okay. First thing is, what are all the concepts applicable? Definition of memorandum, definition of articles, various clauses, analysis on objects clause, doctrine of constructive notice, indoor management, ultra vires, articles of association, miscellaneous. Okay. First, I will cover the definitions. Memorandum is of two types. Original memorandum at the time of incorporation, altered memorandum whenever you make alteration. Articles also same. Definition of various clauses. There are totally 6 clauses. Name clause, situation clause, objects clause, liability clause, capital clause and association clause. Name clause la name will be there. Proposal of a company name. Private company, private limited suffix. Public company ki limited suffix. OPC ki OPC you need to write. Section company need not use anything. Situation clause will contain the state name, not the place. Address full details will not be there. State, AP, Telangana or Tamil Nadu, like that. Next, objects clause. The purpose for which the company is incorporated, objective will be there. Liability, whether liability is limited or unlimited. If it is limited, limited by shares or limited by guarantee. Next one is a capital. Means what? How many subscribers to the memorandum are there? How many shares they have subscribed? Opposite to their name, their signature, everything will be there. Subscribers to the memorandum name will be there in association clause. That's it. 1 minute time for you. Read fast. Read fast. Okay. Let's continue. From here, listen carefully. Next 20 minutes, we are going to complete the major part of this chapter, because substantial part of this chapter is filled with objects clauses, three kinds of doctrines. Okay. Once those are completed, remaining notes just read and leave completed. Over. Okay. Listen. First one, objects clause law, what will be there? What company can do will be there in objects clause of memorandum. Okay. That means two types of objects. Main object, furtherance of that main object, what incidentally we should do. All will be there in the objects clause of memorandum. Number one. Next one. Number two. Memorandum and articles of association, once registered with the company. Memorandum and articles, once registered with the company, they become public documents. I repeat one more time. Memorandum or articles, anything, once registered with the ROC, will become public document. Therefore, every person dealing with the company must read the contents of memorandum and articles and understand the contents of memorandum and articles in a right sense. I repeat again. First thing, tell me about objects clause. What objects clause will tell? Objects clause will specify the object for which company is formed. Okay. Whenever I tell these are your objects, what is the meaning? Scope of its operations, beyond which company cannot go, will be said in the objects clause. Therefore, Whenever objects clause or something is written, it is an indication to the outsiders. It is an indication to the outsiders. Who is an outsider? Anyone other than member is an outsider. Anyone other than member is an outsider. Don't ask me questions at this stage. Just remember, creditor, outsider, directors, outsiders. Everyone is an outsider. It enables the shareholders, creditors, any person dealing with the company to know what are the powers of the company. That means objects clause, if you read, you can know, okay, what this company can do, what this company cannot do. There will be a clarity. There will be what's a clarity. When, if you read MOA, objects clause and AOA. Okay, first tell me. Objects clause will contain the objects for the company is formed. It will explain the scope of its operation beyond which a company cannot go. It will enable the shareholders of the company. It will enable shareholders, creditors, anyone to know what company can do and what company cannot do. What company can engage in, what company cannot engage in. Next one. So, MOA once registered with ROC, okay, will become public document. Therefore, every person dealing with the company, very important, PDWC, every person dealing with the company, okay, is presumed to have. Presumed is what? Really you have or not, I don't know. It is presumed that you read the memorandum and articles. There are 5 tables in memorandum, not applicable for exam, just read and leave. So summarize. Objects, what is the importance of registration of MOA? Question will come for 3 marks. Then you have to write this answer. Objects clause of memorandum will specify the object for which company is formed. It will explain the scope of its operations with, beyond which a company cannot go. It enables the shareholders, creditors and other persons to know what company can engage in. So every person dealing with the company must read the MOA because MOA is a public document. Because once registered with ROC, we will keep it on MCA website. MCA website, who can go? Anyone can go. It's a public document. Now tell me, what are the doctrines? There are 3 important doctrines. Doctrine of constructive notice, doctrine of indoor management, doctrine of ultra vires. First one, let us see the doctrine of constructive notice. Second one is a doctrine of indoor management. Third one is a doctrine of ultra vires. What is this? See here. First I will explain all the 2. Later we will go into ultra vires. Doctrine of constructive notice says that MOA and AOA, okay, will become public documents once registered with ROC. There is one section in Companies Act, section 399. That section says that any person, I am not telling member, any person can go to MCA website, download the documents and inspect the documents. Means they are openly kept for the people, public appearance or not? Yes. So therefore, as per section 399, any person may inspect any document relating to the company by logging on to the MCA website. So as per section number 399, any person can inspect any document in electronic form. Okay. From this, what you have to understand, memorandum and articles once registered will be there in MCA website. So any person can inspect MOA and AOA or not? Yes. If you do not inspect that, and without knowing that if you enter into agreement with the company, it is the outsider's mistake. It is a person dealing with the company's mistake, not the mistake of the company. It is the mistake of the person, not the company. Because MOA, AOA, what is written, that only company can do. In that way only company should do. If it does not do, means you did not object. Why you did not object? You didn't read the memorandum and articles. Are you understanding the point or not? So the point is very clear. As per section number 399, any person dealing with the company, loudly, any person dealing with the company must first read the documents like MOA, AOA. Sir, how come it is available? Under 399, any person can inspect by electronic means any document kept with ROC. So MOA is one of the document kept with ROC. So any person can take a copy of a document kept and registered with ROC. Therefore, any person can inspect MOA and AOA. MOA and AOA. Main rule. Since MOA and AOA are public documents, every person dealing with the company is presumed. Means what? When you are entering into contract with the company, company will believe that you already read MOA, you already read AOA, you understood in a right sense, then only you are entering. They don't inquire you. Did you read MOA? Did you read AOA? Did you understand your right sense? Do you need any doubts clarification? Do you need any online Google Meet? Like this, they don't ask. The moment you are entering into transaction, they believe that you read them and then only you came. Okay? And understood the contents in right sense. So, if you don't read and enter, risk is with you only. Therefore, this doctrine protects company against outsiders and it is a presumption in favor of company. Read doctrine of constructive notice properly. I will give time. The 3 doctrines are life of this chapter. From this only question will come in the next attempt. Flash 1 minute more, everyone. If you didn't read, please complete it fast. Okay, next. Now we completed doctrine of constructive notice. Next area is doctrine of indoor management. Doctrine of indoor management. Same reverse exactly. Okay, so the concept is very simple here. Under constructive notice, what we said under section 399, everyone can inspect the documents registered with ROC. So all the registered documents of ROC can be inspected and taken the copies, and every person can inspect the memorandum because it is a document kept with ROC. So every person dealing with the company must have the knowledge of memorandum articles and understand in a right sense. Therefore, company will presume always that you have the knowledge and then only you enter into contract. Therefore, this is a doctrine which works in favor of the company against the outsiders. Blah blah blah. We read so many things. Exactly reverse to that is the doctrine of indoor management. Doctrine of indoor management says that how outsiders are not protected in constructive. Here outsiders are protected. Means what is my duty as an outsider? I should read MOA. I took MOA and I read, it is there. I took AOA and read, it is also there. After that, what is happening in your company? Why I should ask? How you are not inquiring me in constructive notice whether I understood or not about the MOA and AOA. I also will not inquire whether what is said in articles whether you followed or not. How you are presuming, even though I don't read, you are presuming that I read. I will also presume that whatever is said in the MOA and AOA, company is strictly following it. You are not inquiring whether I understood or not. I will not inquire whether resolutions are passed or not. So this is a doctrine working in favor of outsiders against the company. Okay, this is a presumption in favor of company, outsider. Okay, this will protect outsiders against the company. Read. As per doctrine of indoor management, the outsider or person dealing with the company need not inquire into internal affairs of company. As far as internal affairs of company are concerned, outsider may presume that company has followed all the formalities, and thus doctrine of indoor management acts in favor of outsiders and against the company. Example. What do you mean by internal formalities? Example. There is a case law called as a Royal British Bank versus Turquoise. What happened? Royal British Bank sanctioned a loan to C Limited. Okay, C Limited. Loan was given. Loan given by RBB to C Limited. When loan is given by RBB to C Limited, C Limited, Articles of Association of C Limited is there, na? In that Articles of Association of C Limited, they mentioned that if you wanted to take a loan beyond 2,000 pounds, it require, okay, beyond 1,000 pounds, it require resolution of shareholders. Repetition. There is a bank called as a Royal British Bank. That bank wanted to give loan to a company. Which company? C Limited. C Limited articles, it was written. Memorandum loan taking power is there. C Limited articles, they said that up to 1,000 pounds directly you can take. Beyond 1,000 pounds, shareholders' permission is required. Here they are taking a loan of how much? 2,000 pounds. How much? 2,000 pounds. This is the amount. Okay? 2,000 pounds they have given. RBB Limited, what it should do? RBB Limited went to C Limited. Ask C Limited. C Limited, give your MOA. Read the MOA. Loan taking power is there. Keep MOA aside. Give AOA. They gave AOA. 1,000 beyond. It requires shareholders' permission. Okay. I presume that you passed it. I kept. You didn't ask. I will not. You asked me. When I am entering into contract, did you ask me whether I understood? Now I will presume that you passed that resolution. And on a presumption that you pass, RBB gave loan to the company. But company did not pass a shareholders resolution. Company went into liquidation. Liquidator said that RBB, that company has taken loan from you. Yes, sir. That loan amount is not supported by that loan amount is not supported by proper resolution. They didn't pass resolution. Therefore, you will not get back your 2,000 pounds, they said. Matter went to the court. Matter went to what's a court. Okay. Court law RBB said that, sir, I have to read MOA. I read it. I have to read AOA. I read it. I am expected to have a knowledge of MOA. AOA. I had it. That's all. Whether resolutions are passed or not, why I will ask? Did they ask me when I am entering into contract whether I read articles, read memorandum, understood in right sense? Like that, I will also presume that you followed all the resolutions. Therefore, court said that loan is enforceable. Please read both the doctrines properly. Last doctrine we will tell and we will close. Read total indoor management concept. over. Next. Exceptions we will read later. First, let us see the doctrine of ultra vires. Doctrine of ultra vires says that ultra means beyond, vires means powers. Ultra vires means beyond the powers, beyond the powers. First thing, what do you mean by this ultra vires concept? Same concepts are again. 399 section of what we said, MOA, AOA are public documents. Okay. Hence, every person dealing with the company must have the knowledge of MOA, AOA. Okay. Means what? Once something is not there in MOA, AOA, company cannot do that. Even after that, if it does, we call it ultra vires. All ultra vires are not void. Certain ultra vires are void, certain ultra vires are not void. So I will tell you, Contract Act, 3 types of contracts are there. Valid, void, voidable. Valid means okay. Void means not okay. Voidable means beginning not okay. If ratified means subsequently if it is accepted, we can make it valid. Okay. Things can be of 3 types. Legal, illegal, irregular. Legal, valid. Illegal, void. Irregular, voidable. Irregular means act done is correct but not done in a right way. Means act done is right but the way in which it is done is not right. For example, company has to take loan up to 1000 crores, board can borrow themselves. Beyond 1000 go to shareholders, I said. First you have taken loan beyond 1000 and then you came to the shareholders. Here shareholders permission is taken but the sequence is not proper. So act done is valid, the way in which you have done is not valid. Okay. So therefore for revision purposes, fastly I am telling, there are 4 types of ultra vires. Ultra vires the Companies Act, ultra vires the MOA, ultra vires the AOA, intra vires the memorandum. Intra means within, ultra means beyond, vires means powers. Ultra vires beyond the powers, intra vires within the powers. First, ultra vires the act. I mean, you are going beyond Companies Act and doing illegal things. Beyond memorandum means memorandum there is no such object, you are doing that. In both the cases, transaction becomes void ab initio. It is illegal. You can't subsequently approve by ratification. Board of directors are personally liable because corporate will is lifted. Company not liable. Number 2. Type 3 and 4. Ultra vires AOA. And beyond AOA I have done, but it is within memorandum only. Company can take loan as per MOA. But before taking the loan as per articles, you should pass a shareholders resolution. That I didn't do. Means you didn't do as per AOA, but you have done as per MOA. Okay? Or you have done as per AOA, but board cannot do directly. But board has done. It is ultra vires the board powers, but intra vires the AOA. In these cases, instead of void ab initio, it is voidable. Instead of illegal, it is irregular. Instead of non-ratifiable, it is ratifiable. Means subsequently shareholders can approve. Board not personally, board personally liable. Here company liable. Board not personally liable. Okay. So there is one case law. Ashbury Railway Carriage Company versus Ritchie. In this case law, what happened is, there is a company called as a Ashbury Railway Company. That company is involved in here. That company is involved in selling, leasing of railway carriages and wagons. Bogies will be there, compartments. They will manufacture that. Once manufacturing the compartments, any repairs and maintenance also they will only do. Okay, this is the objects of that company. General contractors they are. Mechanical engineers and general contractors. This Ashbury Railway Carriage Company was approached by another company called as a Belgium Railway Company. Which company? Belgium Railway Company. This Belgium Railway Company came to Ashbury Railway Company. Okay, this company is in railway carriages. This company is also in railway carriages and wagons. This particular BRC came to ARC. BRC is a company. Therefore, one managing director with the name Ritchie came to ARC. He said, ARC, I want loan from you. Okay. ARC said that, okay, I will give. But the problem is, my objects clause, I think loan giving power is not there. ARC said to BRC. BRC said, no, give your memorandum, I will see. They said, hey, mechanical engineers and general contractors. General contracting, generally what you can do, generally I can do anything. Therefore, in that financing is also there. So you can give loan to me, BRC said to ARC, ARC accepted for it. 5-6 days after, by the time when loan has to be given, ARC's legal advisors said to ARC, Arey ARC, are you mad or what? How can you listen to the words of some third party? In your memorandum, loan giving power is there or not there? Tell. No, it is not. And directly not there. General contractors, it is there. They said that array general contractors means not anything here relating to mechanical engineering. Generally, you can do anything. So don't give loan to BRC. ARC's legal advisor said to ARC. ARC went to BRC and said that BRC, I'm very sorry. What you said is wrong as per my legal advisor. We can't give loan, I'm very sorry, he said. Richie said that, Arey, how can you do like that? We made all the arrangements. Believing you, I will go to the court and sue you, he said. ARC said, it's okay, go and sue. Go and sue. Who will win? We will also see. They went to court. They explained full thing. BRC said to court that, sir, ARC, he is a cheater. He accepted for all my proposals. Now he is telling he will not give the loan. Court said that ARC is right. ARC is right. Do you know why? The reason is, general contractor's word does not include anything general. It should be in relation to mechanical engineering. This is, so your contract itself is for loan, which is ultra vires. Ultra vires, so no one can sue another. Therefore, ultra vires is illegal. A illegal contract, who can sue whom? No one can sue another. A asked B to kill C. B killed C. Okay? B killed C. A has to pay to B or not? A didn't pay to B. Can B file a case in the court? It is illegal. Yeah, you will go inside first. Therefore, ultra vires is illegal transaction. So you entered into contract. BRC entered into ultra vires contract with ARC. And ARC said, I will not do that. You can't file a case against ARC now. Okay? But BRC said the word general contractors include any contract. But the court said that it includes only mechanical engineering contracts, like any relation. Okay? Hence, in the given case, financing is outside the scope of Ashbury Railway Carriage Company and transaction is void and null. There is no legal validity. Hence, Richie cannot sue anyone on a ultra vires transaction. 2 minutes time again for the case. Read it. Complete fast. Completed reading. Next one. So these are all the exceptions to the doctrine of indoor management. Means sometimes doctrine of indoor management will not work. What do you mean doctrine of indoor management will not work? Also, generally doctrine of indoor management protects whom? Outsiders against company. But outsiders will not be protected in these three cases. Mark it most important. I am telling you again, mark it most important. September 24 attempt, 99% question will come. Which one? Exceptions to the doctrine of indoor management. Let us see. Indoor management protects whom? Outsiders against company. When the outsiders are not negligent and the outsiders are having some common sense. Means innocent outsiders only they will protect, not knowing outsiders. Example, as I said, directors, creditors, everyone is an outsider to company. Okay, now listen. Director of a company, for example, you take a transaction like this. Company wanted to take a loan. Company wanted to take a loan from some person. Company approached director. Directors can give loan to company, no problem. Company approached director. Director, I want loan of 5 crores. Company said. Director said that give your MOA. He read MOA. He read AOA. AOA special resolution is required after 1 crore. You are giving 5 crores, the special resolution is required. Listening. Okay, done. Entered into transaction. Transaction entered and transaction over. Special resolution not passed. Okay, 1 year after, company said I will not pay you. Okay, director said that no, you should pay. Okay, he said that no, special resolution is required at that time but not passed, but you have given the loan. Director said that I need not ask you whether special resolution is passed or not. I can presume that it is passed. Act sections, this case law said, don't do overaction. Director, you are a director of the company or not? Who will call the general meeting in a company? Directors. You don't know whether resolution is passed or not. You have a knowledge of irregularity. In that case, indoor management will not protect. So director cannot recover beyond 1 crore. Okay. So see, the rule does not protect a person dealing with the company who has a actual or constructive knowledge of irregularity. Case law. Howard versus Patent Ivory Manufacturing Company Limited. Company issued bonds to directors, means debentures to director. As per AOA, company has to obtain permission of shareholders, but company without shareholders' permission has taken. Since issue is made to themselves, directors cannot defend. Directors are expected to have the knowledge of assent of general meeting is not obtained. Simply directors will know whether general meeting resolution is passed or not. So you have a knowledge of irregularity. Sir, normal outsider ki not knowing about resolution is a common sense. So for example, you tell me, in TCS, you are not a shareholder of TCS. All of you listening, okay? You are not shareholders of TCS. Tell me, what resolutions are passed in TCS? We are outsiders, we don't know. But if you ask the same question to director, he will tell. Why? He is inside the company only. Inside, outside means not physically. Here the word outsider means company is different from all other persons, that outsider. Okay? But though director is an outsider to the company, he has the knowledge of whether resolutions are passed or not. So you have a knowledge of irregularity, you cannot defend yourself. Suspicion of irregularity. Listen carefully. Doctrine of indoor management will protect whom? Outsider. When, if you read MOA, if you read AOA, understand it in a right sense, and no knowledge of irregularity, then even though company do not do properly, company will become liable. But you should have some suspicion of irregularity. Simply. Listen carefully. Shall we? Listen carefully. I came to you. Listen carefully. I came to you. I asked, I am from TCS. TCS want 5 crore. Can you give 1 lakh? You said TCS asked. Yes, TCS asked. Okay, who are you? I said, I am person in TCS. Okay, how much TCS want? 1 lakh each. All of you, the 100 students listening to this class, 100, 1 lakh I collected, 1 crore I collected. I took that 1 crore, jump. Okay? After that, I didn't come back. All of you 100 went to TCS. You made dharna. Koushik should come out. Immediately, one person came out from TCS. He asked, who are all you? You said that, no, we are all persons who gave money to Koushik Mukhesh. So, I want money from your company. Okay? They said, who are you? You said that, on that day he came, he shown memorandum, he shown articles, we read it and we gave money to him. You read memorandum, you read articles, you understood in right sense, you followed constructive notice, everything is proper. To whom you have given? To Koushik Mukhesh. There is no person called as Koushik Mukhesh in our company, they said. How can you tell like that? He said that he is from TCS. He say he is from TCS. You will not make minimum inquiry. That's called as suspicion. Some doubt should come. Some stranger coming and asking if you give money and tell TCS you pay me, who will pay? So, doctrine of indoor management will not protect those who act negligently. If a transaction is suspicious, doubtful, unusual, outsider should make enquiry. Enquiry not about resolutions are passed or not. Enquiry should be made about who is taking the money. Okay. Forgery case. What case? Forgery. Whenever forgery is there, no one will protect. Indoor management also will not protect. It become null and void. These are all the various doctrines in this particular chapter called as Memorandum and Articles. These are all the important concepts from the exam's point of view. Okay. With this, we close the Companies Act portion as well. All of you participated. Are you all comfortable with Companies Act portion or not? Everyone? Okay. Extra 1 or 2 topics like partnership, something are already there in the YouTube. Full lectures of partnership are there. Okay, revision lectures. And Companies Act also, Revision lectures, whatever we have done already, it was also there. Whenever you want, you can go there and you can visit and you can listen. Okay. So the main thing is sequence of your study. How to study for the coming examination. First, start with Indian regulatory framework. Second, start with negotiable instruments. Third, you start with Companies Act. Fourth, you start with LLP. Fifth one, Partnership Act. Pakka, if you are thorough from all these things, 60 marks are yours. Over. Next 40 marks will come from those two. Then you start with the SOGA. Okay. After that, Indian Contract Act, the sequence. First chapter. Okay. Bailment and pledge, indemnity and guarantee. Okay. And last one will be contract of agency. This time agency, read properly with exam questions or illustrations given in study material. 99% agency will come for 6 marks to 7 marks in exam. Okay. So in this sequence, if you prepare, short you will get 60 plus in the paper. You will pass the group. Pass the foundation exam itself. Law will never become a problem for you. Are you understanding the problem or not? Okay. So whatever some small pending, incorporation of company, 5 minutes topic. Okay. Sir, incorporation of company, nothing will be there. Subscribers to the memorandum being 7% in case of public company, 2% in case of private company, will attach incorporation document. Okay. That's called as a spice form. Which form? Spice form. They will take the spice form, attach MOA, attach AOA, and they have to attach declaration by a CA, CMA or a CS. Okay. Whenever you want to incorporate a company, 7 or more people in public, 2 or more in case of private, 1 person in case of OPC. They have to take the incorporation document called as a spice form, attach MOA, attach AOA. Okay. Along with that, any other documents. Along with that, declaration by a CA, CMA or a CS that company has been incorporated by following Companies Act and rules. And you should say that none of the directors and none of the subscribers to the memorandum are having any fraudulent background, are not having any criminal background in the last 5 years. You need to give a declaration, file it with the ROC. ROC will give you certificate of incorporation and corporate identity number. That's it. It's a procedure. Yeah. Just read and leave that concept. Exam if question come, you can write. Okay. Mainly negotiable instruments, one part is still pending from my side. Just it will take half an hour, 40 minutes time. That I will make a separate video and upload in one day. Okay. Listen, in that whole range of questions, certain 2-3 compensation concepts are there. I will discuss and I will complete. Okay. Remaining all the videos are already there on the YouTube. Please listen to them and complete. Okay. So with this, we are closing our revision session. Hopefully everyone is happy with the revision, that whatever we have done with the limited time available, we have completed whatever the syllabus we can. Are all of you clear or not? Okay then. Thank you very much. All the very best for your examinations. We will be having YouTube live also. 1 or 2 concepts I will cover there. So please prepare well. Okay. Be confident, prepare well for the exam. All the best for you and your parents as well. Thank you very much. See you in CA Inter. Agency, bailment and pledge, indemnity and guarantee I will upload in YouTube. No worry.